Yeah, I got the Fed meeting for the interest rates. They expect no change, right? But if there is a change, then that would be crazy. It would go pretty wild, I think. Um, oh, before I remove this here, this was the swing trade setup I posted in Daniel's swing trades. We got it's in the profit by $5 at the moment on gold. This is the 4-hour chart, right? It kind of whipped into the drawdown a little bit there and then reversed. So we'll see how that goes. I really like this entry just because of the Anchor VWAP from the all-time high. So yeah, this was the trade setup for everyone to use. Okay, I'm going to remove this. Here we go. That looks good. So where's everyone watching from? Do we have any South Americans, any Europeans, South Africans, Japan? Oh my goodness, what time is it in Japan? Japan's like literally on the opposite side of the world. Japan, Israel, UK, Caribbean, Ireland, nice. 1 a.m. in Japan. Very cool. A trader never sleeps when they have an open position, huh? I've gotten pretty good at sleeping through my open positions. It's definitely a skill you develop over time. Because I remember when I first started trading, oh my gosh, I'd wake up like every 15 minutes. At that point, I was just like, you know what? Maybe I just won't trade. I won't have a trade open overnight. But now, now I really like getting my trade set up during Asian session, and I sleep during London session, so I just let it play out. I wake up and I look at all the money I lost, you know? No, but I'm from Vancouver, Canada. Florida, I've been to Florida. Orlando. I like it. Go to the coast to surf there a couple times. Try not to get eaten by a shark. Okay, cool. So let's just start this rundown. So this will probably take 20 minutes. Not going to keep you guys too long because we're getting better at it, kind of giving a breakdown of this trading style. Now, I will say, in the VIP and all that, if you look at the VIP Success channel, the strategy has been just running so hot for the last week and a half. It doesn't always work out like that, obviously, but when it runs hot, it runs hot. So that's been nice to see. A lot of success going on, and even with non-VIP members because we teach it here, right? So yeah, so the last couple of weeks have been nice just because of these market conditions here, where you can see we had a clean run up and a clean run down, right? These types of this is a 4-hour chart. I'll go down to the 1 hour, but these types of conditions, you see this here, where we kind of have these like whipsawing, just degenerate market conditions right here. This would be difficult to make money with almost any strategy. You just get whipped out, right? Unless you have like I don't know, who knows, but yeah, these market conditions right here make any strategy pretty difficult to trade. As you can see, we have like these long volatile wicks, and then we have a sudden reversal in price and a sudden reversal in price, right? People are just going to get stuck on each end of the trade or whipped out. So just be aware that sometimes these are the market conditions we have to deal with, and the main thing is that you mitigate the damage done when this happens. We don't know exactly when it will happen, not always, but we can not overtrade and not expose too much of our capital to drawdown, right? Okay, so the very first thing we do with this PFK Alpha strategy specifically is we do something called a top-down analysis. Now, this strategy is built off of two main concepts. Well, a few main concepts is number one, 4-hour key levels. Okay, so that's why we start on the 4-hour chart. You can also look at the daily and just kind of look at the overall trend or market conditions if you want, but not too necessary. 4-hour is totally fine for key levels. Number two, the 1-hour momentum. So that is kind of like the trend, how the current price is moving, how strong it's moving in one direction. Is it choppy? Is it trending? All of that. That's what we're looking at on the 1-hour chart. And then we look at number three is the 5-minute entry model. Okay. So once we do our top-down analysis, we're going all the way down to the 5-minute chart to look at the entry model. And the concept of this trading strategy is simple. All we're really doing is we are entering with the 1-hour momentum on a 5-minute pullback, essentially, to put it very simple, right? A 5-minute pullback and then a shift. Okay. A shift would be a pullback, and then sellers, like if we're going short, it'll be a pullback. Buyers are in power temporarily, and then there's a shift, and we're looking to enter in with that shift. Okay, so that's kind of the fundamental foundation of how the strategy works, and it works out long term because it's a very robust style of trading, where basic market movements follow these principles quite often, right? Trends, momentum shifts, and high value entries based off of pullbacks, which we call discounts. So yeah, that's kind of the foundation of the strategies. Just so you know, it's not some fair value gap. How do I delete this stuff? It's not some fair value gap entry model thing where we're just going to look at one time frame. We're like, hey, there's a fair value gap. Boom, we're going short. It doesn't work like that. So the very first thing I do on the 4-hour chart here, we're looking at gold, and gold is like the most tested asset. This will work on any asset theoretically, but I found the most success with it on gold. You can try it on German 40. Actually has been working quite well because German 40 tends to trend often. And you can try it on any asset. You can try it on futures or Forex, okay? Or even a stock if you're into stocks. So the first thing I do is we're doing the top-down analysis, start at the 4-hour chart, and I want to mark my key levels on the 4-hour chart. And these key levels are just for awareness purposes. So we want to make sure that our trade isn't going to be running through any major levels of support, resistance, where price has historically pivoted quite hard, which increases the chances that it will pivot again at that level. If we're trying to take a trade in that zone, we have to be aware of it. So the Anchor VWAP is a tool that we use a lot here, and it's perfect timing because right now the Anchor VWAP is at a level that is very relevant. So this is the all-time high on gold right here. So I'm going to take the Anchor VWAP, which is on this drop-down bar on TradingView, and you can just click on that. And when you click on that, then all you have to do is click the all-time high, just like that. And it's going to pull up this line here. And this is the Anchor VWAP line. It's similar to the normal VWAP, but you have to manually place it onto your chart. And I think it makes it more effective. So as you can see here, it's currently the price of gold is ranging. This VWAP line is very horizontal. Okay. So we actually had quite a bit of reactions to the line, not always perfect, but still relevant enough to be considered, right? So the most recent one was right here. These are 4-hour candles, right? So we had a perfect reversal off the VWAP level right here, a perfect reversal here, and then we had a sweep reversal, which, I thought that might happen again, but it actually didn't. We had sellers break this VWAP level very recently, and there wasn't any type of rally to the upside. It was very uneventful. Buyers are very non-existent currently, right? There weren't a lot of buyers waiting under this level again, which a lot of the time there are. And the reason for that is I believe just the economics were a lot stronger for gold here than they were for here. And I talk about that all the time in my lives and stuff. So the economics for gold right now is a losing momentum, and that's why we've seen this sell off over the last week, which I've flagged often. So this is the first key level we have to be aware of. So this is around 33.25, and that's kind of why I put that swing trade entry right there, 33.25. So I just marked that just to have it marked, right? I don't know why I marked that. I'll delete that. And some other key levels we can consider are what I call psychological levels. So on gold, that would be like a nice even number. That would be 3,300. 3,300 would be a really important psychological level right there. As you can see, you know, as soon as we got close to that psychological level, buyers were waiting, right? So it's relevant. The other one that I've been following is 33.50. Okay, so I like to mark that 33.50. And you can see if I mark 33.50, there-ish, we can see that, you know, there were buyers waiting there at some point on the 4-hour time frame. Not too anything crazy, but enough to rally for the day, right? Enough to rally for the day. And if we're day trading, that's going to be relevant. Okay, and another thing you can do here is kind of just zoom out and see if you have any levels that really look like they've caused price to pivot a lot. And the only other one I really see is potentially this level here, right? Or this level here, right? 30, it's getting close to 3,400, right? And that's another psychological level, but it's so far away from the current price. I'm not going to mark it on the chart. It's just not relevant enough. It's so far away unless we have a crazy pump on gold. I'm going to keep it within the vicinity of the current price. So as far as key levels go, I think these three are fine. I don't think we need to mark a million lines on this chart. It just gets kind of overwhelming. Keep it clean. Pick your top 3 favorite key levels. That's what I would recommend. Yeah, and once that's done, now we can drop down to the the 1 hour chart. And this is where you need a couple things on your chart. So you see these 2 lines here. These are the EMAs. This is the yellow line is the 9 EMA, and the blue line is the 20 EMA. So you can just find that by going to TradingView indicators and typing in EMA. That's going to be this guy right here, right? Basic settings, nothing special. So what we're looking at on the 1 hour is the 1 hour's purpose is really just for the current state of the trend of the momentum for our day trading bias. Okay, that's all we're really looking for. We're looking for the strength of it, not just like, okay, if it's bearish, if there's a crossover like this and it's bearish, then we're going short. We're also looking at the intensity of the sell-off, right? And as you can see here, it's very strong, very dominant. Same with this upward momentum. Very strong, very dominant. And it was for like over a week. Now, if we go over to here, right, this is not what we're looking for. This is what we're trying to avoid. And we don't really know when it's going to shift bullish, but we can kind of sit on our hands sometimes and wait if we have like this price action chopping through the EMAs like it is here. These would be market conditions that I would really avoid trading because it's just going to be a guessing game. It's going to lower the probability of the PFK Alpha entry model working out. And we did see that this was the week here that I was launching the VIP Discord, and we were trying to trade this thing, but the market conditions were probably the worst we had in a few months for it. So it was just getting really choppy. We still didn't get destroyed, but it wasn't like anything special. It wasn't like, oh my gosh, we're all making money. You know, it's just the market just would not give it to us. So the following week, the next week, it just started running clean. And then that's when we really saw the members hitting those wins. So yeah, so this is kind of like what we're looking for, or this. So the thing is, this is the idea. When price is trending on the 1 hour bullish, when the momentum is bullish, we're looking to go long. Okay, only long. We're not looking to go short at all. And when it's trending bearish, like it is here, as you can see after the crossover, we had one clean crossover. We're only looking for shorts. And if we look at the current status of the market conditions, you can see this is exactly what I'm talking about. We're at a key level, we're chopping around. These are the worst conditions to trade it. So I would not be trading any entry model for the PFK Alpha until there's some kind of bias shift, whether that be bullish or it continues bearish. I don't know, but right now, right here, this is not good, especially for if you're trying to go long, because if we look at that, there was a crossover. It's very subtle, and we have a key level. So the problem is, if we're going to go long here, we got to break through this key level that I marked, which is the Anchor VWAP, right? So yeah, just be aware of that. So now that we've looked at the 4 hour, the 1 hour, we can now drop down to the 5 minute. Okay. And the 5 minute is going to be like the entry. This is where we get the signals to potentially enter the market. Sorry. It's not a signal to take the trade on the crossover blindly. It's a signal to do an analysis. Okay. So I want to go back to when we started. I want to go back when this thing started to run. So let's say right here. Okay. So we know that we're bullish on the 1 hour, right? You can see the arrow there I put. So we're bullish on the 1 hour. We have a really clean momentum. And we have this really healthy pullback on the 5 minute. And then we have a decisive crossover. And that's usually the ideal conditions to enter the market. And once we have this EMA crossover, same EMAs, 9 and the 20, right? Then we can look to go long if our analysis looks okay. So this is how I generally do an analysis for my entry if this crossover occurs and I've done my top down already and everything looks good on that front. So I will go long, right? We'll enter in after the crossover. And typically what I do is if I pull up the average true range indicator, ATR, just type in the ATR. So basically, if you don't know what this indicator does, is it takes the last 14 candles and it comes up with the average price movement of those 14 candles. Okay, so I'll go back to the 1 hour, and we're just gonna look at hang on, let me just mark it on the chart here, right around here. Okay, so that's gonna be currently that's around $6. Now that's a little low. That's on the lower end. So what you can do is like zoom out and just kind of get your average. So the average is like, obviously between $6 and $10. Okay. So that's fine to set your stop loss for, right? That's a good level to set your stop loss. So if I go back to the 5 minute chart here, so the reason why that's a good level to set a stop loss is because it creates a really good day trading range where you're going to be in the trade for 1 to 2 hours usually. We don't want to do like these really aggressive tight stop loss trades. Like obviously in hindsight it works out here because the entry is really clean, but typically if you go too tight, like if you're going like a $2 stop loss on gold, you're so likely to get whipped out. You're not only likely to get whipped out just from volatility on gold alone, but if you're trading a prop firm, you're likely to get flagged for over leveraging the account, because the tighter your stop loss, the more lots you need to risk 1%, right? If you didn't know this about your stop loss, the bigger your stop loss is, the less lots you need, the less margin you need to risk 1% or 2%. The tighter you go, if I set a stop loss to $1 and I'm risking 1% on a 100K account, I'm going to need a ton of lot and a ton of margin and the leverage to do that. So what I like to do is the 1 hour ATR, and between $6 and $10. So I'm looking at the previous market structure. Now this is pretty nice, pretty clean setup, because the counter move was so decisive. The previous swing low right here, this is what I always tried to avoid. I always like my stop loss underneath this previous swing low, okay, in case there's some kind of double bottom or some kind of technical pattern like that, right? So I like to give it a little bit of breathing room. So I think a $7 stop loss in this situation is kind of ideal, right? And generally, if you guys know anything about how I trade prop firms and challenges, I really like to target between a 1.5 and 2R. Going higher than that becomes a little bit of a headache because you have to start holding through market reset or potentially news. It's better to get in and out of the trade on your own time rather than having to hold and hold and hold and hold through all these different events that might breach your account or breach some rules. Okay, so if I do a 1 to 2 risk reward in this situation, if I'm looking at the previous structure, we have this previous swing high, right? So ideally, what I would like to do here is just target that previous swing high, right? Obviously we can see that we left a lot of profit on the table, but you'll never be able to time the top, right? Because what if it just reversed here and hit the stop loss, right? And it could very well do that. So it's important to not to get too greedy. Don't let it bother you if you don't have a perfect sniper exit, because that's very difficult to do. And it's better to stick to consistent risk parameters rather than trying to get these huge wins that very rarely work out. So that's how I would set up this trade for the PFK Alpha, right? If that makes sense. And also another thing to think about, guys, think about the psychology of this trade, right? We got like 80% in the profit, and we just started getting lower highs and lower lows. Try not to let that psych you out, right? If you really want to, you can move your stop loss to break even once you're halfway in the profit. But this is what really separates the profitable traders from the unprofitable traders, is that most retail traders would close their position very low in the profit here after they've lost too much of the profit they theoretically gained, right? So a lot of traders, this would be like the zone that a lot of traders would close their trade right here. And then their wins are always going to be smaller than the losses, right? So over time, that's not going to work out for you. Over time, it's very hard to be profitable if your wins are smaller than your losses. Okay, so just really focus when you set up the trade. Just say, I'm going to let this thing hit my TP or my stop loss. I like the trade setup. I'm not going to micromanage it. Let's just see what happens. I can only take what the market will give me. And the only reason I would close a trade early is market reset or news. Okay. But ideally the goal is to set up this trade as a dreamlike scenario and let it play out, right? I've set up this trade how I would really like to see the trade play out. And I'm just going to let the story finish. That's it. We're going to let the story finish. I'm not turning off the movie early. So yeah, that's the setup there. So another thing I want to mention here. So we had some crossovers way up here, right? And we're still bullish on the 1 hour. Like if I put a line here, let me put a line here so we can mark this point. Okay, so we have a crossover here. Okay. And I'm going to just go to the 1 hour and show you guys this situation, because this is a really interesting situation that played out last week. Where is it? Here we go. Yeah. So it's right here. As you can see, we have a lot of really nice momentum, right? A lot of really good momentum. And we have a really clean, beautiful crossover once again, right here. Okay. So this is where the key level really comes into play, because if we were doing the key level analysis on the 4 hour, well, we can see that there's a psychological level here of 3,400, right? Right here. And look at the resistance there that caused. I mean, these even numbers are always very relevant, very relevant. So the problem with setting up a trade like this, right? I'll set it up. I get the crossover, going long. Let's say we get an entry there. And we can set our stop loss to that 1 hour ATR, let's say around $7, plenty of room below this previous swing low. But look at the TP. We have to blast through that psychological level of 3,400 just to even make a 1-to-1, just to make a 1-to-1. So this is a trade we were avoiding in real time when it was playing out. But that is like exactly why you have these key levels on the 4 hour, because it can save you so many losing trades, or it can even give you like more confidence in your entries, right? So yeah, just be aware of that. Top-down analysis is very important. Get as good as you can at marking key levels on the 4 hour. It's not that difficult. Once you get used to it, you can do it really quick, right? And it'll make you a better trader, because you have to understand these high value key levels on the 4 hours where price has pivoted hard, or buyers or sellers have stepped in, or volume just, or price just took off. It means something, right? There are people out there are institutions doing that. Okay, so it means something. Yeah, so I would just highly recommend any asset you're trading, always mark out your key levels. And I'm not a big fan of trend lines for key levels unless they're super obvious. For me, if I'll show you a super obvious trend line for me that I was looking at recently, and that was this one right here. This was before the week started, and it was right here that I really liked it, right? And I wanted it to break, and I was talking about this in my analysis video. I wanted it to break and retest a little bit before going short. Obviously, that's exactly what it did. You know, I'm not always right, but I'm right a lot about this kind of stuff. And so if there's a very overwhelmingly obvious trend line, you can use that as kind of a zone to be aware of. But I wouldn't get super creative with it. Like there's so many here that we could choose from. You know, I just like the very clean, obvious ones. I feel like if they're very clean, very obvious, then they're relevant. Okay, so just be very cautious with your trend lines. That's all I can say. Okay, so yeah, that's basically the whole rundown of the entry model. As you can see, like we had a shift here. I'll mark real quick before we wrap this up. On the 1 hour chart, we had a shift in momentum right here, right? And this is going to be the pain point of the strategy, where you have a shift in momentum. Luckily, it happened, you know, around, yeah. Well, this was the 3,400. It happened very quickly, very clean. It's more painful if it takes a while to happen. It chops back and forth, but it was very clean. So that's nice, right? So if I mark that, I'm just going to move this blue line over. So that's where the crossover was. So that's where we kind of start to look for shorts rather than looking for longs. So here we would have looked for longs. Maybe we would have had a couple entries here where we potentially would have lost because the momentum is shifting. Okay, so when that momentum shifts, that's when you're going to notice the strategy produce losses. Okay, so if I go down to the 5 minute again, we'll find that line. Okay, so any point after here, we could have looked for some good shorts. Okay, so once again, we had a really nice one here. We had a dump, we had a really healthy pullback, and we had a crossover right here. So this would be a really clean entry for me. If I'm considering all things, there's no key levels around here. We have this one, 33.50 that I marked, but we are so far away from that it's irrelevant, right? We're like $40 away from it. So my TP doesn't have to run through there. And for my stop loss, right, this previous swing high here, that's kind of what I'm avoiding. So I'd go with another $7 stop loss would be okay. That would be fair. If you want to get more conservative, you can go $10. $10 is fair. You're going to be in the trade a bit longer, but it's a little bit, if you want to give yourself more breathing room, if you feel like the market conditions might be too volatile, just give yourself more breathing room. That's fine. You'll just be in the trade a bit longer. And then we could target a 1 to 2-ish like that. And that trade's pretty nice. I mean, we're in this trade here for about 11 hours because the trade was super choppy, right? It didn't go straight to our TP, but that's because the stop loss was set to $10. If we were to set it to $7, right, at a 1 to 2, let's see the difference. There. Right? Okay, so the first one was 11. This one was going to be 7 hours. So like, yeah, quite a few hours less by just reducing the stop loss by $3. Okay, so that's kind of the setup we're looking at here. Yeah, so yeah, just guys, currently, I know learning about a new strategy is hype, but just be very cautious at the moment. We're having crossovers, every hour on the hour. And as you can see from the 1 hour conditions, we are just in this point in time where it's like we need some kind of movement out of this area and to create that new momentum that we're chasing, rather than just trying to trade these conditions. So we had a really nice long run. That long run is now coming to an end. We're just going to wait. We're going to wait, and we're going to see. So yeah, that's basically the rundown, guys. Hopefully that's helpful. That's how we've been trading. This is one of my main entry models. I also have an orb-based entry model that we're still developing. That's going to be very interesting when we're complete that. You can keep an eye on my Instagram. I'll post about it once it's complete. Hopefully next week, if all goes well. But everything that we do, we backtest extensively with software. And we need proof of concept. It's so important to backtest with a proof of concept. Otherwise, you're just guessing, right? You're just living on hopes and dreams. But if you have historical evidence that your strategy has profitability, then at least you have a chance. At least there's proof of concept. Okay. So a lot of these strategies you see online, guys, just be careful because anyone can cherry pick the best entries and showcase that on YouTube or anything like that. But unless you're seeing some kind of backtest results, just be very cautious. I always tell people that. And we have backtest results for this too. We had it in, let me show you. Actually, can I find it here? Stick with me for a sec. Let me see if I can find it. Maybe it's gone. Oh, here it is. Okay. Let me just share. Okay, I'm just going to share my other screen here. Super slow. Okay, I'll share this app here. And backtest results. Here we go. There we go. That took long enough. So yeah, this is the recency 12-week window we backtested. Gold was actually we backtested it for gold during a pretty hard window. It was still decently profitable over the last month. We have all the data statistics here. 108 trades over the course of 3 months, which is pretty good. That's like an average of like, I don't know, a little under 2 trades a day. We tested on German 40. German 40 was probably the best results. We have a really nice equity line here. Not a lot of drawdown. Drawdown was only 2.2%. Once again, 178 trades, 89 trades, so less trades overall, but pretty nice potential there. Okay. So yeah, and we tested on US 500. This was US 500. This one had a bit more drawdown. Let's be expected with US 500, sometimes a bit more volatile. Not bad though, 5%. So it wouldn't like breach any Forex accounts. And then EUR-USD was pretty choppy, but still, this is 1% risk per trade too. So yeah, everything we do is backtested. It's important whenever we talk about a strategy that proof of concept is in the mechanical numbers. And obviously this isn't going to reflect, this doesn't reflect how we necessarily manage to trade because it's purely mechanical entries. Because we do a little bit of subjective observation on market conditions, like I was showing you, like currently how price is choppy through a key level. These backtest results don't consider that. So yeah. Anyway, I thought I'd show you that. I found it interesting. Oh man, infinity. Sorry, it's gonna give you a headache. How do I get out of here? Okay. Change there. I'll get you out of there. Sorry. All right. So yeah, um, that's it. Anyone got any quick questions? Go easy on me. I got to bounce in like 5 minutes. Go easy on me. Get out to like 50 questions. You like power answer all your questions. No, next question. Really useful recap. That's great. Yeah. Yeah, I like to recap. It just kind of gives everyone a fresh perspective on how to trade it themselves, right? And I like this because like the reason why I like this so much is because it's not like everyone's going to be taking the same trade. It's like you see the crossover, you do your own analysis, and you really can grow with the strategy as a trader yourself. You're not just taking some blind signal. So that's always so nice, right? VWAP parameters, please. It's just the standard VWAP, anchored VWAP right here in TradingView. Okay. So that's it. And if I click on this here, let me click on that for you. Settings. Hello. Did I not get the settings? I don't know. Am I doing that wrong? Probably. Okay. Anyway, it's the standard settings, but you can just take the deviations off. That's all. So it's a single line. I don't know why that anchor VWAP setting is not working. Yeah, weird. This is usually the setting button, but nothing's popping up. So yeah, let me try to reload this. It's done that before. Very annoying. Try it one more time. There we go. Yeah, so basically it just took off the bands, right? It's just standard. Yep, that's it. Easy peasy. What time zone are you locating as I see you're taking trades in Asia? Yeah, I'm in Vancouver. So I like to set up trades in Asia, just let them play out through London because I'm sleeping. And then I'll trade orb in the morning. Do we have to only take trades in the direction of the 4-hour trend? No, the 1-hour trend. The 1-hour trend. 4-hour trend, or the 4-hour trend, if you can trade with the direction of the 4-hour trend, is obviously another benefit, another bonus, but not necessarily because we've been taking shorts for the last week against the 4-hour trend. It's been going very well. That's why for day trading, I think the highest you should consider is the 1-hour, just because otherwise, like if you're swing trading, yeah, 4-hour trend, yes, or if you're swing trading economics as well. But 5-minute day trades, I think 1-hour is as high as you really need to go to consider trend. Obviously, if it aligns with 4-hour, that does help. Yeah, the inputs for the VWAP here are just normal, just standard. I unchecked all these boxes. Yeah, this is the settings, guys. It's just normal. It's just right here. Anchor VWAP. You have to manually place on the chart yourself. So I just click on Anchor VWAP and click there like that. See, and then it just pops up. You can do it anywhere too. You can go like right here, and it will anchor to the candle close. So the price will shift around if you switch time frames because I'm anchoring to the candle close. You see that? So yeah, just be aware of that. But it's usually close. If I go from 4-hour to 5 minutes, usually close. All right, guys. Yeah, that's all I can do. But yeah, I will keep an eye on my swing trade channel. I posted a gold one in there. It's kind of like currently at the entry, so we'll see what happens with it. And yeah, hopefully the rest of the week goes good with the news. We don't really know what's going to happen. I'm still going to trade, but I'm not going to trade news. I'm going to react to the market conditions the best I can. But when you have multiple news releases per week, it can just go crazy, right? So just be cautious. All right, guys, thanks for joining. And yeah, I will talk to you in a bit. Bye-bye.